you're watching Business World Live. I'm Dani Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Tuesday. The 10th consecutive week of oil price hike and the biggest yet for 2022 takes effect today. BSP Governor Ben Jocno admits the surge in oil prices poses a major risk to the Philippine economy.
With a spike in oil prices showing no signs of slowing down, NEDA Chief Carl Chua wants the fuel subsidy program for PUVs doubled to 5 billion pesos.
How will Russia's invasion of Ukraine affect the Philippines? For Finance Chief Sonny Dominguez, our economy will likely become a collateral damage of that war.
And the peso sinks to its weakest level since 2019. That's on the back of the continuous spike in global crude prices. We begin our broadcast with 2022's biggest oil price hike yet that's taking effect today.
Local players raised the price of gasoline by 3 pesos and 60 centavos per liter, while diesel spiked by 5 pesos and 85 centavos per liter, and finally kerosene increased by 4 pesos and 10 centavos a liter. This is now the 10th straight week of price hikes. Bangko Sentral Governor Ben Jocno admits that the surge in oil prices poses a key risk to the Philippine economy and inflation environment. Jocno says Russia's invasion of Ukraine may continue to drive oil prices even higher, which in turn could push inflation beyond the target for a second straight year. Jocno says inflation could settle above the target range of 2 to 4% if crude prices average higher than $95 a barrel this year and in 2023. Last month, the BSP said the assumed average for Dubai crude oil for the year already stood at $83 a barrel, higher by $10 in December.
Now, with the increase in oil prices showing no signs of abating, a transport group is now pushing for a fare hike in public transport. Liga ng Transportasyon at Operators sa Pilipinas has filed a petition with the LTFRB to increase the minimum fare to 15 pesos. Group President Orlando Marquez said that while they recognize the impact of the proposed fare hike to commuters, the welfare of drivers and their families must also be considered.
Kailangan di magsalubong tayo sa kahirapan. Biktima tayo lahat ng pandemic. Kaya pinakiusapan ko sila na 15 pesos na lang.
The government's economic team is eyeing to double the budget for fuel subsidy for public utility vehicles. Speaking to President Duterte, Socioeconomic Planning Secretary Carl Kendrick Chua says they are planning to increase the fuel subsidy fund to 5 billion pesos from the previously announced 2.5 billion pesos. The government is also looking to increase the country's buffer stock of petroleum to 45 days. That's from the current 30 days. However, this measure should be passed by Congress, which is currently on break and will resume session on May 23. That's after the elections. With this, President Duterte is considering calling for a special session.
We will double the subsidy, and the first tranche will be given in March and the second tranche in April. Number 2 is to continue working with the private firms on promotional discount of oil companies up to 1 to 4 peso per liter discount. So this will help alleviate additional for the jeepneys and the other PUVs.
House Committee on Ways and Means Chairperson Joey Salceda says subsidies are not enough to address the rising prices of oil in the country. He says the government should also suspend excise taxes on fuel to help various sectors affected by the rising oil prices. Salceda also believes it's high time for fare hikes and wage adjustments.
Doon na po yung tinatawag natin shared sacrifice. Hindi na ho kakayanin, kailangan po ng konting fare hike. Dahil since 2018 pa, 9 pesos na tayo. Yung hindi po kakayanin po ng fare hike, pananaw ko, kailangan po ng wage adjustment. Yung mga korporasyon, binigyan natin ng napakalaki pong tax savings under CREATE.
For how long do we see this problem with soaring oil prices extending? Let's find out from Energy Undersecretary Gerardo Reguisa Jr. Good morning. Yusek Arguisa, thank you for joining us today.
Yeah, good morning to all of you and to our viewers and listeners.
All right, Yusek, we had you on the big story last night. You said there that, like the palace, you are one with calls to at least amend or review the Oil Deregulation Act. Are there any specific provisions here or parts of RA 8479 which you deem should be amended?
Yeah, well, first and foremost, we want the incorporation of the unbundling of the price of oil. And as I explained previously, unbundling means we must know what are the components of the totality of the price of oil. Of course, we are all dependent on the world market price, but when it reaches the retail market, it has some added amounts, and we want to know what are these added amounts so that we'll be able to determine where we could lower the total price of oil. We have previously, the Department of Energy has previously came out with a circular on this matter to operationalize an unbundling scheme so that in one way or another, we will be able to see if we could find ways of lowering the price. But a temporary restraining order was issued when a case was filed by stakeholders, and eventually a preliminary injunction was filed. And so we did be incorporated now and be legislated as part of the regulation law. We also asked to legislate or put into law the minimum inventory requirements, just a policy, but to ensure that we have a stronger teeth for this one. We have asked that it should be incorporated in the law. And we also have incorporated a program of the Strategic Petroleum Reserve. This is also good if we would include this in the law. And lastly, in a neutral term, because stakeholders are very sensitive about the regulation, we ask that the government be given the authority to intervene when there are sudden surge of prices and prolonged prices like this one. Because what has been happening day in, day out, every time that we have an increase in the prices of oil products, we're just sitting down, we couldn't do anything. So somewhere along the way, we believe with due discussion and debate in Congress, we could come out with a solution, a dynamic one, where we don't have to wait anymore with any intervention from Congress, so that automatically we could address these kinds of situation.
Sir, just on that point, wasn't that already embedded in the train law that there is an automatic suspension of excise taxes should oil prices hit a certain level per liter and $80? And we're already way beyond that. Bakit ang tagal pa ng suspension ng excise taxes? You said last night you're still asking Congress to suspend that. That's around 10 pesos of savings sana that consumers could already have. But at the same time, foregone revenues of 131 billion pesos for the government.
Yeah, you're right. You're right. We went to Congress to ask for the suspension of this excise tax. Itong train law, we had this, but there was a sunset provision. Fund was being raised for the pandemic, and additional amount was incorporated. But after a certain period, I think 2 or 3 years, there's a sunset provision that it ceases to be effective, and it's not effective anymore. That's why under the same concept, when the price hits $80 per barrel, then we're asking Congress that the same concept be applied, and the excise tax should be on the reverse, be suspended.
So,
because the concept, of course, is that when it comes to taxes, it's the Congress that has the authority.
Okay, given that, Yusek Urquiza, what has been the response here from Congress? I know they are on break here. Session, like what he reported earlier, will be resuming May 23rd. That's after the elections. Can we afford to wait that long before they actually act on this? The president is already asking a special session. I know you've talked to them previously. What's the response here from Congress?
Yes, we're happy. At least Congress has responded. The Department of Energy has raised these concerns as early as October last year. The amendment of the deregulation law and the suspension of the excise tax. And some congressmen raised the issue that why did we come in October only? I didn't have to answer it since we raised this already 2 years ago. It's beside the point already. What is important now is the president called for the Congress to amend the regulation law, and they've responded to convene. That's good enough for now. Everybody's campaigning, and instead of waiting for the next Congress in July, at least we, at this point, we see some hope that we could be able to respond to this situation, at least for the suspension of the excise tax, because I understand the passage or amendment of the regulation law would take some time.
Yusek, you had a meeting with our local oil and fuel players. What came out of that meeting? Do they see this problem extending for longer? How many more fuel hikes are they seeing might happen here? Is there enough supply? Not just because of the war, but there's also election day drawing near. There's a lot of issues, not just on the fuel prices, but even the energy security in the country.
Yes. Well, first let me start by saying this is a global problem. We have lack of supply production. We have so much demand after the pandemic, complicated by some factors like the Iran non-delivery of its production, including Venezuela, the United States not producing as much as it was producing before, and now complicated by this problem of the Russia-Ukraine war. And at this point, we really have to brace up, all of us. And this problem of supply, we would like to assure everybody that we have sufficient supply. We've been meeting with the oil companies, keeping track of the inventory, and they've told us that they have supply contracts that will last, and they have sufficient volume being supplied by their suppliers abroad. The only problem here is the cost, because we're getting the supplies abroad, and it's the production companies that's dictating the price.
Okay, lastly, Yusek Urquiza, I guess this is a question on everybody's mind at this stage, especially after today's hike. We're talking 3 to 5 pesos increase here. Are we expecting another hike by next week, and by how much?
From all indicators, we see the price in the world market. It's going up. And we have an institutionalized formula or method in the Philippines. When we have an increase, then we add this with the previous cost, then we take the average. Since it's increasing, definitely the average will be increasing also. It's something that we do not know. When the Russia-Ukraine problem was not still there, the projection was it will go as high as $120 per barrel. But apparently, the situation has worsened because, of course, countries that are producing fuel will most likely store this for more extreme purposes and reasons. We have to brace up. What I advise is that we cancel activities that are not essential. Better stay at home, spend time with our families, let's wait until such time that we have found a permanent solution, or at least all the other temporary concerns or solutions that we can do are with us already. So pahinga lang sa bahay at sanay naman tayo sa pandemic, hindi lumalabas. So
Okay.
siguro extend lang natin ito at makakatulong din tayo sa situation natin.
All right, that's going to be a very tough task considering that we are slowly reopening the economy
Oo nga.
now that Metro Manila is under, and various other areas in the country are under alert level 1. Thank you very much for your time this morning. Again, Energy Undersecretary Gerardo Erguiza Jr. Thank you, Yusek, and stay safe. Now we'll have more stories when Business World Live returns. Stay with us.
Audio check the... Sige, ate Dan, patawag si Kuya Jester.
Jess, 1, 2, 3.
Hi, Dan. Okay, I can
Okay,
hear you just
perfect.
fine.
Okay.
Dan, can you hear me?
Yup, all good.
Ayun, pwede naman pala.
Yes.
So ganito na lang, Dan. Sige, I think kaya naman nating mag-market hit. We'll just do a workaround na lang on the terminal. Iso-zoom na lang natin.
Okay.
Pero with the
Oh my
current
God,
setup
7,000
naman,
yun.
kaya namang mag-guess ng market analyst.
Can you just strap market 7,000 levels down 2.7%?
Sorry, come again, Dan. Market, PSEI.
PSEI at trading at 7,000 levels,
Okay.
down 2.6% just at open.
Copy.
Diretso lang pa.
Sige, so Dan, ganun yung mangyayari. At least naririnig naman kita, ako na nasa Zoom, at naririnig mo rin naman ako dyan.
Okay.
So okay naman.
Yes.
Okay, Dan. Thank you.
Dan, tama na ba to? Para bago ako bumalik sa loob.
Malinis ba direct yung mga kalat-kalat?
Gilid, mga baka na kailangan tanggalin. Okay na to? Atras daw.
You're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Dani Laurel.
How will our country be affected by Russia's invasion of Ukraine? Well, for Finance Chief Sonny Dominguez, it's not far-fetched that the Philippine economy will become a collateral damage in that ongoing war. During the President's Talk to the People address last night, Dominguez explained that the indirect shocks to the Philippine economy will be felt in 4 major channels. These include the commodity and financial markets, investments, and our fiscal health. However, Dominguez believes the ongoing crisis won't last long.
I would like to emphasize that we do not expect this crisis to last very long. However, there may be some lingering effects. We have seen similar crises in the past, and we have weathered all of these crises very well. Based on these experiences, we are confident that we have the tools and the preparation necessary to help our people through this crisis.
Meanwhile, the Economic Development Cluster is proposing 14 measures to alleviate the impact of the Russia-Ukraine war on the Filipino people. This includes easing mobility restrictions in the entire nation, as well as allowing the return of face-to-face learning in the country.
The first is on the overall economy, is to shift to alert level 1 at the soonest possible time for the entire country and open all the schools for face-to-face learning to increase our domestic economy and offset the external risk. So while we cannot prevent the risk from coming from the global perspective, we can strengthen our domestic economy to provide the people with more jobs and opportunities.
All right, and I hope you were able to gas up before the clock struck 12 last night. I mean, fuel showing no signs of abating there. And apart from that, nickel also has gone vertical. How much longer is this commodity rally going to hold?
All right, Jess, as you mentioned, buti na lang I did. We had Yusek on the show earlier on saying we might have to stay home for quite some time. Like he mentioned, this does not seem to abate. The good news, if you can call it that, is that, Brent prices are going down a touch. It's the first time we've actually seen that. So there does seem to be a bit of, a little downward trend here. But nevertheless, it's still way above $120 a barrel, and $120 to $140, according to Governor Diokno of the Bangko Sentral, may send our average inflation to as fast as 4.7%, way beyond our target levels of 2 to 4%. And like you mentioned, nickel, take a look at that, Jess. It's just a vertical surge here, up by 115% in the past month already. It was one of the most extreme price moves yesterday we've ever seen in the London Metal Exchange. That was up by already 90% yesterday, 55,000. It's finally gone down to 48,000, but nevertheless, of course, nickel is a very, very important metal. We use this for stainless steel. We use this for lithium iron ore. This is the highest we've seen in 35 years. The thing was that there was already very tight supply of commodities even way before this war started. And this war is just exacerbating all of that. And this happens, of course, as the banks have cut their exposure to Russian commodity suppliers. Major shippers have now steered clear of the country's key ports. Apart from nickel, you've got copper, aluminum, both rising to all-time highs in Asia and London trading. And this is, of course, all affecting our peso. For the first time since 2019, we've seen it sinking to 52 levels. We were worried about this. This was imminent. And there we are. We've sank past 52 to a dollar since, these inflation worries as well because of oil coming. And again, you've got the index, bouncing back to 7,100 levels. But earlier at the open, it was already at 7,000 levels here. We are down by quite an amount, 2.5% down for our local index here. S&P 500 yesterday had the worst day since 2020. We are absolutely no exception, Jess. And you can see that the trading day is far from over with this major slump. We've already been down close to 4% in the past 3 days of trade.
Wow, down 4% in just 3 days. We're not even sure if it's already at the bottom of the barrel there. But speaking of commodity prices at the forefront, the shortage has definitely boosted the profit of a couple of players here, at least in 2021. Tell us more, Dan.
Exactly, Jess. So as I keep mentioning, the past few days, really the limelight has shown on the metal producers, on the oil producers. Just want to show here on the right side of my terminal how important this shortage has been for some of our miners. Let's kick off with DMCI. Of course, DMCI is a Conglo, but they do have holdings of Semirara as well. Their profit in the fourth quarter of 2021 was 4.9 billion pesos. That's versus the 1.9 billion pesos year on year. So, more than 100% increase there. They did mention higher commodity prices, electricity rates boosted their profit at triple digits in the subsidiaries because of the start of, get this, just a commodities super cycle. Semirara saying that there was a 71% jump in the average selling price of coal and a 49% increase in electricity selling prices. Another one jumping as well, Felix Mining, that is up by 0.7%, way beyond, way against the tide of the sell-off here. Look at this. I mean, they've just been going upwards the entire February. This as their profit in 2021 reached 2.4 billion pesos. Again, nearly double the year of 2020. They said 2021 was a blessing for us because of the high metal prices for copper and gold, and that was even way before all of these commodity prices started skyrocketing today, or at least in the past couple of days. So again, Felix and DMCI, a couple of bright spots here when it comes to the prices of commodities soaring like they are.
Here are the other headlines we're keeping our eyes on. Aboitiz Construction has clinched a deal to develop the second phase of Lima Estates industrial land expansion in Lipa and Malvar, Batangas. The industrial expansion will cover 57 hectares of the Lima Estate, which is a PEZA-registered development of the Aboitiz Group's infrastructure arm, InfraCapital. The project is seen to accommodate new businesses in the area and generate 22,000 jobs once completed. Aboitiz Construction says they are eyeing to complete this project by 2023.
An industry group says shipping costs may rise as much as 25%. That's as global oil prices continue to skyrocket on the back of the Ukraine-Russia war. Philippine Liner Shipping Association President Mark Marcos said fuel is typically 40 to 50% of vessel costs. And with Brent crude now at $130 a barrel, the association expects other operating expenses apart from the vessel costs to increase. In total, Parco says they're expecting about 15 to 25% increase in shipping costs. The industry is now seeking fuel subsidies, the removal of excise tax on oil, and a reduction in regulatory charges to soften the impact of rising fuel prices on the shipping costs.
On the other hand, the Trade Department says it has not received many requests to raise the SRP of goods in the wake of the Russian invasion of Ukraine. With this, the department says there are no plans to adjust the suggested retail prices of goods for now. After all, Trade Undersecretary Ruth Castello says much of the current goods inventories and fuel products were manufactured or ordered before the war broke out. And that's a first look into the business day this Tuesday, March 8, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.